China is selling off U.S. Treasury bonds.
China owns hundreds of billions worth of U.S. debt.
China sells their treasuries. The bond prices fall.
Seeing their holdings of US treasuries. Well, there's a bunch of reasons, but the key one is...
I want to help explain exactly what's going on because this might actually be part of a strategy not to...
What if China's plan to destroy the US dollar is actually working? For decades, the dollar ruled the world, but now something is shifting. Quiet deals, gold moves, digital currency, and a silent war no one's talking about. Is this the end of America's financial power or just the beginning of a bigger battle? Let's break it down. Chapter 1. The currency war has begun. For nearly 80 years, the US dollar has been the king of global trade. It's more than just green paper. It's the currency that fuels almost everything on the planet. When countries buy oil, settle debts, or store their national wealth, they do it in dollars. That's why the US holds a unique kind of power. It can print money, run massive trade deficits, and still stay in control. Why? Because the world needs dollars. It's a financial superpower, built not just on military strength but on trust in the dollar. Now enter China, the world's second largest economy. Its currency, the renminbi or RMB, often called the yuan, has been around for a long time, but it hasn't played on the global stage like the dollar. Until recently, the RMB was a local currency, used mainly within China or in limited trade with close partners. It wasn't part of global reserves in any major way. In short, the renminbi was no threat to the dollar. It was small, tightly controlled by Beijing, and not trusted by major economies. But something is changing. Over the past few years, China has started moving its currency pieces carefully, just like in a high-stakes chess match. One trade deal at a time, one financial agreement after another. Countries like Indonesia, Russia, and Brazil are suddenly agreeing to use the renminbi in place of the US dollar. China is pushing for its currency to be used in global trade, energy deals, and massive infrastructure projects. They're using the Belt and Road Initiative as a weapon, not of war, but of influence. And for the first time in decades, the dollar feels challenged. It's not just talk. The data shows that more countries are choosing to hold renminbi in their reserves. Some are settling billion-dollar trades without using a single US dollar. What was once unthinkable is now unfolding in plain sight. China's quiet currency revolution is picking up steam, and people are starting to notice. But how exactly is China pulling this off? What's their plan to destroy the dollar's grip on the world, and is it actually working? Chapter 2. Backdrop. But before we dive deep into strategy, we need to understand the moment that flipped the switch. Because this isn't some slow behind-the-scenes play anymore. Right now, we're in the middle of a full-blown economic war. And the latest spark? It came from Washington. In early April 2025, everything changed. On April 9th, the United States, under President Trump's administration, dropped a tariff bomb. A shocking 104% tariff on Chinese imports. That's right, 104%. The goal was clear. They wanted to pressure China to play by US trade rules and shift global manufacturing back to American soil. But China didn't take it lightly. They fired back fast, with a 50% tariff on US goods. But this wasn't over. In just a matter of days, the United States escalated again. The White House raised the tariffs even higher, this time to a jaw-dropping 145%. Suddenly, the world wasn't just watching a trade disagreement, it was watching a dangerous escalation between the world's two largest economies. In response, China slammed US exports with a 125% retaliatory tariff, signaling that they were done playing defense. All of this unfolded within a single week. And history? It's repeating. Enter Scott Bessent, Trump's Treasury Secretary and Wall Street disruptor. Back in the 1990s, he and George Soros broke the British pound. They called the bluff, made the bet, and watched the UK economy tumble. Black Wednesday was born. Now, Bessent might be circling his next victim, China's renminbi. Scott Bessent, now with the full backing of the Trump administration, may be dusting off that old British playbook. And instead of the pound, it's the Chinese RMB that's in the crosshairs. The logic? Force China into a financial corner, apply pressure to their currency and debt markets, shake confidence from within and from without. If successful, this could force Beijing to devalue its currency, an economic humiliation the CCP is desperate to avoid. But why? Why go to such lengths? Because in the halls of Washington, they believe China's rise must be stopped not by missiles, but by money. Yes, while global markets panicked, shipping routes stalled, commodity prices wobbled, and while the media rushed to cover the tariff war, a more silent weapon was already being deployed. One that could shake the foundation of the global financial system. China began dumping US treasuries. This is what analysts call the nuclear option. It's not dramatic, it's deadly. By selling off US debt, China pushes US bond yields higher, making it more expensive for the US government to borrow money. And when interest rates rise, the entire economy feels the pressure. Mortgages, car loans, and credit card rates all climb. Consumers spend less. Businesses cut back, the stock market flinches, and suddenly, a booming economy starts to sputter. China knows this. That's why they pulled the trigger. By the end of April 2025, it was clear this wasn't a bluff. Financial markets watched nervously as Beijing began quietly dumping billions in US bonds. This was a major turning point, not just a trade spat, but a deliberate attempt to shake the dollar's dominance. But the truth is, this wasn't a snap decision. Chapter 3: China's multi-layered retaliation strategy. If you think China just woke up one day and decided to dump US treasuries, think again. This move is part of a much bigger, much older plan. It's slow, methodical, and deadly. For years, China has been preparing for this exact moment. Their exit from US debt positions wasn't rushed, it was calculated. Back in 2010, China held over $1.3 trillion in US treasuries. But by the end of 2024, that number had shrunk to just $760 billion, the lowest level since 2009. That's not a coincidence. That's a warning. China has been slowly pulling away from the dollar, getting ready for the day they would stop playing the game by Washington's rules. Now, with tariffs rising and tensions boiling, China is unleashing its multi-layered retaliation strategy. First, it's the rare earths. These are 17 chemical elements that are absolutely critical to everything from electric cars to smartphones to military tech. China controls over 70% of the world's rare earth exports. And now they've imposed export controls, choking off supply to the US and its allies. That's not just economic pain, that's strategic power. Then come the corporate restrictions. China has blacklisted 18 American companies, from tech firms to agricultural giants, cutting off their access to Chinese markets. These aren't small players. These are billion-dollar companies now stuck in limbo, watching their market share disappear overnight. Next, Beijing turned to international law, filing formal complaints with the World Trade Organization. It's a chess move. While the US goes for brute force with tariffs, China is trying to paint itself as the reasonable actor, using the global system to pressure Washington into backing off. It's all part of the image war, the narrative battle. And all of this is happening alongside the treasury dump. The point is simple. China isn't just fighting this war on one front. It's fighting on every front: trade, finance, legal, resources, technology, and it's coordinated. But here's where things get even more dangerous. When China sells US treasuries and interest rates rise, it's not just the government that suffers. Everyday Americans feel it too. Suddenly, mortgage rates jump. A family looking to buy their first home, they're hit with an extra $500 a month in payments. A small business trying to get a loan, they can't afford it anymore. A retiree depending on their 401k. They're watching their nest egg shrink as the market reacts with fear. Higher borrowing costs lead to lower spending. Lower spending leads to slower growth. Slower growth leads to layoffs, less investment, and political pressure. And that's exactly what China wants. Not just to hurt the economy, but to turn Americans against their own government's strategy. Meanwhile, the US Federal Reserve is trapped. Raise interest rates to fight inflation and you crash growth. Lower rates to support borrowing and you risk weakening the dollar further. It's a no-win scenario. And that's the brilliance of China's plan. They don't have to fire a single bullet. Just a well-timed bond sale, a few export controls, a tariff or two, and suddenly the dollar doesn't feel so invincible anymore. But this goes even deeper. Chapter 4: Bilateral agreements. Yes, China is quietly building an alternative system, one trade deal at a time. And the most powerful weapon? Bilateral agreements that cut the US dollar out of the equation entirely. Take Indonesia, for example. In early 2025, China and Indonesia signed a historic deal. Instead of trading in US dollars, the two nations agreed to use their own currencies, the Chinese renminbi and the Indonesian rupiah. It sounds small, but it's a massive shift. No more dependency on the dollar for imports, exports, or financial settlement. Why does this matter? Because Indonesia isn't just some random country. It's one of Southeast Asia's biggest economies. It's a key player in the region, rich in resources, and heavily involved in global trade. By cutting the dollar out of the picture, Indonesia sends a message: we're ready to move on. And it's not just about convenience. These countries are protecting themselves. They want to reduce their exposure to the dollar's wild swings. They want freedom from US interest rate hikes and political decisions that can crash their economies. And they don't want to be caught in the middle of a US-China conflict. China is offering them a way out, a new system, a new center of gravity. And this isn't limited to Indonesia. Similar deals are being struck with Brazil, Russia, Iran, the UAE, and even some parts of Africa. The renminbi is slowly becoming the currency of choice for more and more global transactions. It's not just about today, it's about setting the stage for tomorrow. Because when enough countries stop using the dollar loses its magic. It loses its demand. And when demand falls, so does its value. Does it feel big? Believe it or not, China has another big idea. Chapter 5. The Gold Play. Yes, behind the scenes, Beijing has been stockpiling gold at an unprecedented rate. Between 2015 and 2025, China's official gold reserves have nearly doubled, and analysts believe the real number could be even higher. In April 2025 alone, China added over 20 tons of gold to its central bank reserves. Why? Because gold is trust. Unlike paper currencies, gold is immune to sanctions, immune to inflation, and immune to geopolitical manipulation. And China understands that if the world ever loses faith in the US dollar, it will start looking for a store of value. By quietly increasing its gold reserves, China is creating a financial firewall. If its currency faces pressure, it has a hard, shiny backup. If the dollar collapses, China's gold holdings surge in value, giving it even more global influence. But China is now allowing certain trade partners to settle debts in gold-backed digital yuan. That's not just financial innovation, that's disruption. A digital currency backed by gold would instantly have credibility in global markets, especially among nations that are skeptical of both the dollar and the euro. It's stable, verifiable, and free from Western control. Chapter 6. The Digital Yuan Strikes Back. Recently, at the Luzhizui Forum, China's central bank governor Pan Gongsheng pledged to expand the digital yuan's global reach, aiming to challenge the dollar's dominance not by force, but by infrastructure. With 6 major foreign banks, including Standard Bank and First Abu Dhabi Bank, now adopting China's cross-border interbank payment system, the yuan's influence in global trade is rising fast. The goal? A multipolar world where no single currency holds absolute power. Pan made it clear, traditional cross-border payment systems are slow, fragile, and easily politicized. The digital yuan, by contrast, offers speed, security, and most importantly, sovereignty. It's not just about efficiency, it's about breaking free from the dollar's grip. And China's just getting started. But why China is going to all the possible extremes? Because this isn't just about economics anymore, it's about power. If we zoom out, we can start to see the bigger picture and ask the real question: what's truly happening here? Chapter 7. The worst start in 50 years. If you've been watching the markets in 2025, you may have noticed something shocking. The US dollar is off to its worst start to a year in over half a century. Yes, more than 50 years. It's not just a blip, it's a collapse in confidence. The dollar has dropped over 10% this year against a basket of major global currencies. That's massive. And the effects are starting to hit everyday Americans right where it hurts, their wallets. Prices for imported goods are rising fast. From groceries to electronics to home furnishings, anything brought in from overseas is getting more expensive. Why? because the dollar doesn't buy as much anymore. If you're paying in weaker dollars, foreign companies will demand more of them to get the same value. Even traveling abroad is now a luxury for fewer Americans. What used to cost $1,000 for a European vacation might now cost $1,300 or more, all because the exchange rate has shifted out of your favor. And guess what? This isn't just bad luck, it's policy-driven. President Trump's sharp swings in trade policy, aggressive tariffs, and ongoing fights with the Federal Reserve have scared off foreign investors. Many now view U.S. Treasuries, the gold standard of global financial safety, as riskier than before. The debt is ballooning, inflation fears are back, and faith in America's long-term economic management is crumbling. Paolo Pasquariello, a finance professor at the University of Michigan, put it bluntly, "The recent erratic policymaking by U.S. authorities is shaking global confidence." That's not noise. That's the sound of something cracking. But despite its steady rise on the global stage, the Chinese renminbi still isn't ready to take the crown from the US dollar. Why? Chapter 8. Why not ultimately RMB? Because serious roadblocks stand in the way. Let's start with the basics. Control. China's government exercises tight authority over the flow of money in and out of the country. These capital controls are designed to protect the domestic economy, but they come at a cost. Global investors and foreign governments need freedom and flexibility when dealing in currency. The RMB offers neither. Its policies are often unclear, subject to sudden change, and lack the transparency that builds long-term trust. That's a major red flag for countries considering shifting away from the dollar. Then there's the issue of liquidity. The US dollar dominates nearly 90% of all foreign exchange trades worldwide. It's easy to access, highly trusted, and instantly usable in large-scale transactions. The RMB? Not so much. Limited availability in global markets makes it hard to conduct fast, high-volume trades. When it comes to reliability, the dollar still wins. But even if a nation wants to trade in local currencies like the RMB, practical risks remain. These currencies often lack the liquidity needed for big transactions. Plus, exchange rates are far more volatile when the dollar isn't involved as a stabilizing middleman. This unpredictability makes cross-border trade riskier, especially for smaller or developing economies. To make matters more complicated, shifting away from the dollar means building entirely new financial infrastructure, payment systems, risk management tools, and digital settlement networks, all of which take time, money, and trust to implement. So, while China's strategy is ambitious, it's not foolproof. For the RMB to truly rival the dollar, Beijing must ease capital controls, open up its financial markets, make its policies more transparent, and above all, build global confidence in the long term. Until then, the RMB will remain a rising contender, but not yet a champion. So, if their currency isn't the ultimate replacement, is China's plan to bring down the dollar actually working? Chapter 9. Are these technologies working? Oh, they're not just working, they're winning. China isn't playing the old game anymore. They've built an entirely new one: digital currencies, gold-backed trade, and infrastructure for loans diplomacy. And guess what? That system doesn't need to replace the dollar outright. It just needs to be ready when the dollar slips. Think about it. China has created something far more dangerous than a direct challenger. They've created a void filler, a ready-made alternative financial universe that can snap into place the moment the current one cracks. That's not replacing the dollar. That's waiting for it to fail. Because if you zoom out, it becomes clear. No other currency is remotely prepared to take the dollar's crown, not the euro, not the yen, not even the digital RMB. But that's not the point. The point is that China has carved out the space, an escape route from the dollar's dominance, a plan B for the world. And when enough countries take that exit, the game changes forever. So, what happens now? Does America wake up and innovate its way out of decline? Or does it keep pretending the storm isn't coming? One thing's certain, we are in the middle of the biggest financial power shift in over a century. Drop your thoughts in the comments. Is this the beginning of the end for the dollar? Or will the US rewrite the rules once again? Because this isn't just a currency war, it's a battle for the future.